Hello, I'm Ben Hunnicky, head of Morgan Stanley Investment Management. U.S. investors are looking for new ways to diversify globally. Right now, we're finding interesting opportunities in countries like Mexico, Egypt, and Sri Lanka. Joining me today is Brad Godfrey, co-head of Emerging Market Debt. Brad, welcome.
Thanks for having me.
Tell us about your team and the approach you have to investing in emerging markets.
Yeah, so our team's process is something that's existed for 40 years. We've been operating as an investment team for more than 40 years. And when we're talking about emerging markets, it's really not one thing. It's 100 plus countries, all moving in different directions, different policy mixes, different economies. And so what that leaves us with is a pretty inefficient area to generate investment ideas within. And so over the 40 years, we've really honed our investment process to be able to take advantage of those and deliver them for investors. And there's really three key pillars. So the first piece is we want to embrace the broadest investment universe possible. We cover every country with an investable capital market, even some that don't, because we think they will one day, in search of mispriced assets. And so this is more than 100 countries around the world. The benefits there for our clients, maybe number one, obviously there's quite a bit of diversification that comes along with that, but more importantly for us, a lot of these countries, we're looking at places where very few others are. And so we have a real informational advantage. Maybe it's one or two analysts rather than thousands of analysts looking at other areas of the capital markets. And so this allows us to invest in some places that might not be that familiar for normal investors, but with a margin of safety because we have this real informational advantage. The second piece is an intense focus on country fundamentals. So we are analyzing direction of policy and the quality of the economic institutions in all of these countries because we know 50 years of data shows us that is the most important factor to get right in emerging markets. We like to use this term changes in levels of economic freedom. And so when countries do things like improve rule of law, respect for property rights, the soundness of the money supply, they tend to become better places to live. Importantly for us as investors is capital markets generally outperform. So that intersection of country policy changes and how assets are being priced is where we generate investment ideas. And then the final piece is a heavy investment in trading and operations. We feel like our trading and operations team, which is part of our team, 6 traders, 8 operations people, they're experts in emerging markets, is so important. As you might imagine or know, trading, settling in some of these countries can be relatively complex. So that's a little bit about our investment process.
So with everything that's shifting around in the global macroeconomic environment, trade, how are you thinking about emerging markets today and where are the opportunities?
Sure. Yeah, so we're seeing more and more investors become interested in emerging markets, which is nice. I think we haven't seen that maybe in a few years, and it creates an attractive entry point for investors. And so what we're finding is more and more investors, given the macro environment I think you're describing, Ben, are seeking to diversify holdings away from the United States. Not totally away, but a lot of clients have overweights, intentional or unintentional, to U.S. at this point in time, and so looking for something else. In emerging markets is a pretty attractive setup right now in that there's a few points. Number one, EM sort of had an economic and business cycle already, just a couple years ago. Whereas developed markets was kind of spared from that. The combination of COVID, Fed really aggressive tightening cycle, and then Russia's invasion of Ukraine, spiking food and energy prices, really challenging for the poorest countries in the world. Of course, challenging for everybody, but most challenging for them. So they kind of had struggles, went through challenges, and they're sort of on the road to recovery. We also have a lot of reform stories. Emerging markets is all about turnarounds, and so related, when countries go through these challenging periods, oftentimes the only way forward is to implement positive structural reforms, those policy, quality of economic institutions that I talked about earlier. So we're seeing that in a lot of places. It's really exciting from an investment perspective. Positioning in the asset class is really light. So a lot of investors have fled the space over the last few years. And so to the extent that we are seeing investors start to come back in, more investors coming back into the space can provide an additional bid for asset prices. And then finally, valuations, because of that combination, sort of a tough period for emerging market economies, investors fleeing, valuations are still relatively compelling. So it feels like a good entry point today.
So in every asset class, people debate the active versus passive dynamic. Why active in emerging market debt?
Yeah, active versus passive in emerging market debt. active all day, every day.
Yeah.
Reasons being is the benchmarks have quite a bit of room for improvement. They tend to be concentrated in our space. They include what I'll refer to as uninteresting assets, and they also include developed market risk. So on the concentration side of things, if you look at like the local EM debt benchmark that
What is in the benchmark for EM debt?
Right. So like if we look at the local denominated one, there's basically 7 countries make up almost 70% of the benchmark. So countries like Brazil and Mexico, China, India, some of the ones, the bigger emerging market countries. What a lot of investors don't realize is that those markets, although they're the biggest and in many cases most well-developed emerging markets, they're also the most volatile. Because when investors are thinking emerging markets, your average investor, they're looking at those countries. And so when it's sort of risk on, they pile into those countries. When it's risk off, they pile out of those countries. And so these bigger EM countries, the capital markets within them tend to actually be the most volatile. So going beyond the benchmarks and including some of these places I was kind of alluding to before can really help manage volatility and also just open up the opportunity set. Uninteresting assets, I think about some dollar bonds in really high quality EM countries. We could argue they're probably not even really EM, like Saudi Arabia, United Arab Emirates, relatively well-run countries. People are not concerned about their creditworthiness, and the result is the credit spreads on their dollar-denominated debt are very, very tight. It's sort of priced for perfection in many ways, and they may very well deserve it, but it might not also be a compelling investment idea if you're thinking about emerging markets. And then the final piece is developed market risk seeping into emerging market debt benchmarks. Dollar-denominated EM bonds issued by, let's say, a sovereign, right, a country, those are issued at a spread to treasuries. They're on the US yield curve, and so you have the treasury component, just like a US investment grade corporate that can change the price of that bond, and then you have the creditworthiness of that country and the spread that can move around and change the price of that bond. And so you explicitly have that US treasury duration driving a good portion of your returns. Historically, the sovereign EM dollar bond index has had 50+% of its performance explained by U.S. Treasuries. And I'm not sure that's what you're looking for when you're allocating to emerging markets debt.
So we talked about like markets like Sri Lanka, Tanzania. What makes your team special in terms of being able to go into those markets and understand the credit, understand the risk, and be able to find alpha in those investments?
Yeah, I think coming back a little bit to what I talked about before, it's really, I think, 3 competitive advantages set us apart relative to our peers and allow us to uncover these types of opportunities, oftentimes in places that very few others are looking. So you got to have a big team, right? We have a 50-person team. We're physically located across 7 offices around the world. We represent more than 20 nationalities. We speak more than 30 languages. We visit between 60 and 80 countries per year from a research perspective. So it's a big, big effort. That big team, that really talented and diverse team, allows us to then go and embrace this really broad universe that we like to refer to as EM, but again, it's 100+ countries. So looking a mile wide, oftentimes there might not be anything interesting, but then when we find something happening on the policy side or mispriced asset, then we want to go a mile deep. And that second piece is that intense focus on country level fundamentals. Is the policy mix improving? Are they improving rule of law, soundness of money, freedom to trade? A lot of times in emerging markets, they haven't done such a good job of that, as well as many developed markets, and that's why their economies are still emerging. The policy mix has not been that supportive of investment in that country. And then the final piece, which we think is underappreciated in our industry, is the intense investment in the trading and operational infrastructure. So again, 6 traders on the team, 8 operations people. These are emerging markets experts, and they're not charged just with best execution and settling complex trades. Of course, that's the primary role, but we ask them to constantly be seeking out new markets, new instruments, new liquidity sources, so we can efficiently access these 100+ countries for our investors.
So with all that's shifting in the global supply chain, trade conflicts between China and the US, how do you see the EMD universe evolving over the next 5 years?
Sure. Yeah, I think it'll evolve in a few different ways. So adoption by investors, I think, is going to continue to be an important piece. Development and maybe pun intended, maybe not. I'll get to that in a moment. But then also private markets. That's another interesting thing I know you and I, Ben, have talked about in the past. So on the adoption side of things, I mentioned before, positioning is really light in emerging markets. And I think more and more investors are going to be looking to emerging markets debt and equity as a meaningful piece of their portfolio. Whether that's what's going on in the US or other factors, the reality is that, speaking specifically about emerging markets debt makes up more than 30% of the global debt stock. No investor has anywhere close to that amount within their fixed income portfolios. And I'm not really recommending that, but probably more than zero, which many investors here in the United States have. As far as development, we'll continue to see more and more countries develop. So there's 100 investable countries today. There will be 110 in a couple of years. There'll be 120 in a few more years. Markets becoming more complex, different financial instruments, easier access to adoption and development of the emerging markets asset class is coming. And then the final piece is private markets, right? We talk so much about that in the US and Europe, private equity and credit. This is a space of emerging markets that is still relatively early innings, but we think is something that is going to continue to develop. Just like in the US and Europe, there are plenty of companies who need to borrow money, but not necessarily want to tap the public bond markets for a variety of reasons. We're seeing more and more interest in companies and countries looking to tap private market instruments, lenders being interested in that. And I'll say it's almost like 20 years ago in the private markets in the US where the terms are still favorable to the lenders. And so that represents a pretty good opportunity going forward.
Brad, thank you for being here. We always like to end with a personal question. Obviously, you have a lot of travel in your life, given you cover the emerging markets, but what elements of your personal life do you like to include in your professional life?
Yeah, elements of my personal life that I like to include in my professional life were parents. I always view one of my most important roles is teaching my children well, but as I bring my personal life into my professional life, I like to think about what can I learn from my children and what aspects that I think they're really good at can potentially help me in my job. So I think of my son, he's our oldest. He has this—
How old?
14 years
14,
old.
okay.
He has this incredibly well-developed moral compass. Just his sense of right and wrong is way beyond his age. And so I like to think if we're making a hard decision, not black or white, sometimes in the gray, is this a decision I'm going to be proud to talk to my son about? My middle daughter, who's just about to turn 11, has this unique combination of intense competitiveness, but also compassion.
Middle child.
Yeah. So intense competitiveness and compassion, right? We want to win, thinking about that intense competitiveness in business, but then also all of our partners in this people business and ensuring that we treat everybody with the respect and compassion that they deserve. And then our youngest has this incredible zest for life and views everything through the lens of like everything's new and exciting.
How old?
She's 7.
Okay.
And I like to take from her, like, yeah, we're emerging markets debt investors predominantly. You need to have a healthy bit of skepticism to be good at that as an investment team, but there's lots of new things developing. As I mentioned before, we're always looking for new markets and new instruments and new ways of doing things. And so embracing that sort of zest and that excitement for everything being new, I try to bring that into my professional life as well.
Awesome. Brad, thank you so much for being here.
Thanks for having me.
Don't forget to check out more emerging market insights from Brad and his team, and be sure to subscribe and stay up to date with our latest investment ideas.